Life insurance. Just hearing those words can feel a little overwhelming. For a lot of families, it seems super complex, it's full of jargon, and honestly, it brings up stuff we don't always want to think about. But what if there was a straightforward game plan to get it right? Well, that's what we're going to do today. We're going to build a simple game plan to help you navigate it all. Let's dive in.
And that's really the big question, isn't it? If the unexpected happened tomorrow, is your family okay financially? This is the core issue we're going to unpack, using a clear, no-nonsense approach to financial planning.
Okay, so what's really interesting here is the story these numbers tell. On the surface, things look pretty good, right? 71% of middle-income families have some kind of life insurance. But, and this is a big but, when you look closer, a whopping 45% of those policies are for less than $100,000. And that, right there, points to a massive gap between just having a policy and having enough of a policy to really protect your family.
Right, so this isn't just about a coverage gap. It's really a confidence gap. Why is it so hard for people to figure out what's actually enough? Well, a huge part of the problem is just how complicated the whole industry can feel.
So here's a simple rule of thumb to kind of get us started. The general advice is to have a policy worth about 10 times your yearly income. So if you make, say, $60,000 a year, you'd be looking for around $600,000 in coverage. Now, think about that for a second. When you compare that number to the stats we just saw, you can really see how many families might be seriously underinsured.
And wow, this number, it really drives home that whole confidence problem. A full 25%, a quarter, of middle-income households say they just aren't confident buying life insurance without some professional help. It's a huge signal that people are looking for clarity and real guidance, not just another complicated product.
Okay, so if the problem is all this complexity, what's the solution? Well, the source material we're digging into points to one specific, super straightforward type of insurance, term life. So let's break down what that actually is.
And honestly, it's pretty much that simple. You pick a specific period of time, say 20 or 30 years, the time when your kids are growing up and you've got a mortgage, and you're covered for that term. There are no complicated investment things tied to it, just pure, simple protection for when your family needs it the most. So here's the crucial difference, right? Term life is designed for a specific window of time, and because of that, it's generally a lot more affordable. Other types like whole or universal life, well, they're built to cover you for your whole life, and that's why they're usually way more expensive and, frankly, a lot more complicated.
All right, so we know what to look for. But how in the world do you figure out the right amount? That 10 times salary rule is a good start, but there's an even better, more precise method we can use.
Well, it's called the DIME method. And trust me, it's a super easy way to remember how to calculate what you actually need. It's a total game changer for getting a realistic number.
Let's just walk through it real quick. D is for debt, and that's all your debt besides the mortgage. Think credit cards, car loans, that kind of stuff. I is for income. You gotta ask, how many years of your salary does your family need to replace? A good starting point is about 10 years. M is for mortgage. Yep, for most of us, that's the big one. You want enough to pay that thing off completely. And finally, E is for education, thinking ahead to your kids' college costs. You just add those 4 buckets up, and boom, you have a number that's not just a guess, it's a real, solid target based on your family's actual needs.
Okay, so this brings us to a much bigger idea, a whole financial philosophy that goes way beyond just buying an insurance policy. This is about creating a complete game plan for your family's future, one that covers both protection and growth.
And this quote from Stephen Madison, man, it just nails the goal here. It's about getting the protection you need now, but doing it in a smart way that doesn't mess up your ability to save for retirement later. It's all about finding that perfect balance.
In this chart, it shows you exactly how this plays out in the real world. Just look at the 2 scenarios. With a costlier permanent policy, that higher monthly premium might not leave much room for anything else. But by choosing a more affordable term policy, you actually free up cash every single month. That's the difference you see right there. And that's money you can then invest to build wealth for your retirement. I mean, think about it. If that difference is, say, $200 a month, and you invest that over 30 years, whoa, that can grow into a pretty serious nest egg.
And that, right there, is the whole idea behind the buy term and invest the difference philosophy. It's a super proactive strategy. You're solving 2 huge financial problems at the same time, protecting your family today while actively building wealth for tomorrow.
Of course, none of this works if you don't actually understand your options. And that's why this last piece of the game plan is so important. It's all about the value of education and getting clear, simple information.
So according to the source material, a really helpful approach is all about making finance, well,
understandable. This means finding information that uses simple language, that explains the why behind different options, and that helps you figure out your own specific needs. The whole point is to feel empowered, so you can make your own smart decisions.
And this last quote just drives that point home. At the end of the day, financial security isn't about someone selling you a product. It's about you getting the education and the clarity you need to confidently build your own plan.
So, as we wrap this all up, the big question really comes back to you. Now that we've broken down this whole game plan, protection, savings, education, what does your financial game plan look like? And hey, what's the next step you're going to take to make it real?